welcome to the Deep Dive. So if you follow tech news, I mean, you're constantly hearing about AI chips, right? Generative models, software, all that exciting stuff.
Yeah, the front-end glamour.
Exactly. But today we are skipping past the stars of the show. We're going to dig into the, well, unglamorous, but absolutely essential infrastructure that's quietly making this whole AI revolution even possible.
It really is like the stage crew, isn't it? Maybe more critical than the actors sometimes. Our mission today is to unpack the story of Vertiv Holdings ticker VRT. They're based in Ohio, and their, frankly, massive recent growth is tied directly to this global acceleration in artificial intelligence.
And the numbers Vertiv's putting up,
Yeah.
they're just staggering. Especially, when you put them next to their neighbors, some big Ohio company. We looked at this contrast. Think about Procter & Gamble, right? Classic blue chip, their shares, down nearly 10% year to date. Or Goodyear, the tire maker, down more than 20% this year.
Ugh. Yeah, tough year for them. And then you have Vertiv. And remember, we're talking about a company selling like cooling units and power supplies, nothing flashy.
Right.
Yet its stock is up more than 50% year to date. And if you zoom out, look at the last 5 years, Vertiv's stock has just exploded. It's up over 850%.
Wow. Okay, so when you see that kind of performance from what looks like an industrial company, you know something fundamental has shifted, right? This isn't just general economic good times.
No, it's very specific. It points to a really intense, specialized demand.
So the critical question we really want to explore for you today is, how did this company, focused on basic infrastructure, become one of the absolute hottest, fastest growing plays in the whole AI sector?
Well, to get that, you kind of need to know where they sit, physically and metaphorically. They're headquartered in Columbus, Ohio, yeah, but they operate globally. Big scale, something like 31,000 employees across 40 countries.
So a big international footprint.
Huge. And they're really focused on one thing, keeping the digital world running smoothly, efficiently.
Okay, so let's break that down. When we talk about critical digital infrastructure, what are the key things Vertiv actually makes and services?
It really boils down to 3 main areas, and they all address the intense demands of modern computing, especially AI. First, you've got advanced server racks, the physical housing for the hardware.
Okay.
Second, specialized power supply systems. You need clean, consistent electricity and lots of it. And third, and this is maybe the most critical piece right now, massive specialty cooling systems.
Yeah.
Because heat is the enemy.
And their customer base, I mean, it's broad, right?
Yeah.
Finance, manufacturing, regular cloud stuff. But the source material we looked at was really clear. This recent growth spurt, it's pretty much all driven by the hyperscalers.
That's such a key distinction. Hyperscalers aren't just, big tech companies. These are the giants. Amazon Web Services, Oracle, Microsoft Azure.
We're really big cloud players.
Exactly. They don't just host data. They build and operate these immense global networks designed specifically for massive data management and cloud computing on a huge scale.
And what are all those hyperscalers doing right now? It's an arms race, isn't it? Building out AI capability.
Completely.
We know AI models, especially the big ones, the LLMs.
Yeah.
They just chew through data and computing power like nothing else.
Oh, yeah. The demands are astronomical.
Which translates immediately into this unprecedented demand for new, incredibly powerful data centers.
And that's where Vertiv steps right into the spotlight. It's fascinating because everyone, rightly focuses on the microchip, the Nvidia GPUs, the brains of the operation.
Sure.
But that chip doesn't exist in a vacuum. These latest, highest-powered processors, they generate exponential amounts of heat, way more than before.
So it's that infrastructure bottleneck we keep hearing about. We keep making the chips faster and more powerful.
Right.
But the rest of the system, the cooling, the power, hasn't really kept pace.
Exactly. If you don't have these specialized power systems and massive, super efficient cooling setups, the chips overheat, performance tanks, and ultimately the whole data center just fails.
So Vertiv is basically selling the heavy-duty electrical grid inside the data center, plus the complex AC system needed to keep the AI revolution from melting down.
That's a great way to put it. They're like the specialized utility provider within the data center itself.
Okay, so they provide this crucial gear. But how did Vertiv turn that, non-negotiable requirement into the kind of high-profile partnership that really juices their valuation? I'm talking about the Nvidia collaboration.
Ah, yeah, the Nvidia link. That partnership is absolutely key because As our sources really highlight, Nvidia is, I mean, they're the undisputed leader in these high-end chips for AI, no
Oh,
question.
they set the standard.
They set the standard for computing power, and by extension, they pretty much dictate the standard for every other piece of physical hardware that goes into that data center.
So everyone else, all the suppliers, the data center builders,
Yeah.
they have to align their tech with whatever NVIDIA specifies.
That's pretty much it. And Vertiv wasn't just chosen as a supplier, they were chosen to collaborate directly with Nvidia to solve the biggest architectural problem facing these next-gen data centers, power delivery.
Okay.
So this wasn't just about Vertiv selling, off-the-shelf cooling units. It was a deep redesign, a fundamental rethink of the power delivery system itself.
Let's get into that technical bit, because that seems like the real differentiator, right?
Yeah.
What separates Vertiv from just being another industrial supplier?
Yeah.
What was the power problem they needed to fix?
Okay, so the core issue is voltage limits. If you look at data centers today, they mostly run on 54 VDC power distribution.
VDC, volt direct current.
Right, direct current. The flow of electricity is constant, unlike AC, alternating current, which is what we usually have in our homes.
Hang on, why DC power in data centers anyway? AC is everywhere else.
That's a great question, actually. Data centers use DC because the chips themselves, the microprocessors, fundamentally operate on DC power. So if you bring AC power into the data center, you need all these bulky components and complex steps to convert it to DC. And every conversion step wastes energy and generates more heat.
Right, more heat, the thing they're trying to get rid of.
Exactly. So by minimizing those conversions and sticking mostly to DC distribution inside the racks, they gain efficiency and reduce waste heat. Makes sense.
Okay, so they use 54 VDC. Why is that the limitation now?
Because that 54 VDC architecture just hits a physical wall, it can really only handle power levels below about 200 kilowatts per rack reliably.
And 200 kilowatts.
It sounds like a lot, but when you're running these massive AI clusters, 200 kilowatts per rack is suddenly not enough, not nearly enough.
Okay.
Next generation computing, especially for these hyperscalers building out AI factories, needs megawatt-scale power. We're talking 1,000 kilowatts or more per rack to feed those incredibly power-hungry chips.
Wow. Okay, so we hit a power delivery wall. Yeah. So the solution is this 800 VDC system Vertiv is co-developing with NVIDIA. How does just increasing the voltage solve both the power and the heat problem?
Okay, think of it like water flowing through a pipe. If you need to deliver a huge amount of water very quickly, you basically have two options.
Okay.
You can increase the volume of water flowing per second. That's kind of like increasing the electrical current, the amps. Or you can increase the water pressure, and that's like increasing the voltage.
And just pushing more current through, that causes issues.
Big issues. In electricity, anytime you push more current through wires, you get exponentially more resistance and heat loss. It's actually related to the square of the current I²R loss for the engineers listening. It grows incredibly fast.
So more current means way more wasted heat.
Precisely. So by designing this new 800 VDC system, Vertiv and Nvidia are cranking up the pressure, the voltage. This lets them deliver that needed megawatt-scale power, but with significantly less current flowing through the distribution components.
Which means?
Radically less waste heat generated just getting the power to the chips.
That's actually brilliant. They're tackling the heat problem before the power even reaches the processors. It's a fundamental change to the standard.
It really is. And this makes Vertiv an active architect of the future infrastructure, you know, not just a company selling parts off a list. Now, these new 800 VDC systems, they're not expected to be fully rolled out until maybe 2027.
Right.
But the fact that they're developing it and that Vertiv is integral to defining that standard, that's already having a profound impact on their current contracted work. People are planning for it.
That timing.
Yeah.
That brings us nicely to the financials,
Yep.
doesn't it? The demand is clearly there. It's pouring in. But how does this AI infrastructure boom show up on their balance sheet right now? Especially if the big payoff from 800 VDC isn't really hitting until 2027.
Yeah, good question. You can really track the belief in this future standard by looking at their backlog. That's the unfulfilled contracted orders they already have locked in. In just the last 18 months, their backlog has just soared. It's grown 55%. It went from about $5.5 billion at the end of 2023 to $8.5 billion in the most recent quarter.
Wait, that's a nearly $3 billion increase in future revenue.
Yeah.
Locked in. Just waiting to be built and delivered.
Locked in, yeah. It tells you the hyperscalers are making huge bets right now on Vertiv's ability to deliver this next-gen stuff.
That's a massive vote of confidence.
And their recent performance kind of confirms they're executing well. In the most recent quarter, their net sales were up a sharp 35% compared to last year. Operating profit climbed 32%. And crucially, earnings per share up 42%.
So they're growing fast, but also managing costs, keeping profits up.
Yeah, they're showing strong operating leverage even during this rapid growth phase.
Okay, but let's get to the elephant in the room. For the listener who sees that, 850% stock increase over 5 years, the natural, critical question has to be, is this just a hype bubble? Or is this valuation actually grounded in reality? Let's do that valuation check.
Right, you have to. And you need to balance the past performance against what everyone expects to happen. If you look backwards, using the traditional trailing price-to-earnings ratio based on what they earn in the last 12 months, it sits at a very, very expensive 83.6. I mean, by any conventional metric, that screams overvalued.
Yeah, 83 times earnings for a company selling cooling systems, that would normally be a huge red flag. But with that massive backlog we just talked about, the forward-looking growth is everything here, isn't it?
It is. It's all about future expectations.
Yeah.
Because of those really strong growth projections driven by this AI build-out and the 800 VDC standard, the forward PE ratio drops significantly. It comes down to about 45.6.
Okay, 45.6. Still sounds high, but maybe less crazy. How does that compare?
Well, let's put it in context. Compare it to two of the other big infrastructure winners in the AI boom.
Okay, like Nvidia, the chipmaker standard.
Right. Nvidia currently trades around a forward PE of, say, 40.2, give or take. And then you look at Arista Networks, they make key networking hardware for these data centers. Their forward PE is about 52.
Okay, so Nvidia around 40, Arista around 52, and Vertiv at 45.6 is sitting right smack in the middle of those two key AI infrastructure players.
Pretty much. It's not the absolute cheapest way to play the theme, but it's definitely not the most expensive either, based on forward expectations.
So what that suggests then is that the market is already pricing in the success of this 800 VDC standard.
Yeah.
And the continuation of this massive AI boom all the way out to 2027 delivery.
I think that's exactly right. If that growth materializes as projected, if they hit those targets, then arguably the stock looks, fairly valued today relative to its peers in the space.
Okay, but that raises a really critical question about the risk, doesn't it? If the current price assumes perfect execution out to 2027, what happens if there are delays? What if rolling out 800 VDC slips by a year? Or what if the pace of AI expansion just cools off a bit?
And that is precisely the risk you're taking on if you invest now. Vertiv's current valuation is absolutely built on the assumption that this massive acceleration continues, pretty much unabated. If those deployment deadlines slip, or heaven forbid, a competitor somehow manages to come up with a viable alternative standard, well, then that forward multiple of 45.6 is going to look pretty inflated very quickly. However, for now at least, their position as that close design partner with Nvidia gives them, significant protection and really good visibility into that demand pipeline. They see what's coming.
Okay, so let's try and synthesize this. What's the big picture takeaway here?
Yeah.
Vertiv is clearly essential. Highly specialized player in this whole AI ecosystem.
Absolutely.
They're the ones actually translating this abstract, almost limitless demand for computing power into tangible physical needs, like extreme cooling and this foundational 800 VDC power architecture.
And their financial health, backed by that incredible backlog growth and the strong earnings performance, it just confirms how critical they are right now. They aren't just riding the AI wave, they're literally helping to build the boat.
Which gives them security.
Significant security, yeah. Provided, of course, that the AI tide keeps rising like everyone expects.
So the ultimate takeaway for you, the listener, seemed to be that, yes, the analysis suggests Vertiv is a strong prospect, a key enabler, but it's one that's priced for near perfection. They are solid proof that this AI boom isn't just about silicon chips and clever software. It's also fundamentally about pipes and wires and heavy-duty air conditioning.
Yeah, the nuts and bolts. And maybe the final provocative thought here, something to chew on, goes a bit beyond just Vertiv's balance sheet.
Okay.
If this kind of infrastructure boom continues at this pace, we are talking about a massive sustained increase in demand for energy and also for water needed to cool these incredibly power-dense data centers.
Like the real-world resources.
Exactly. Vertiv's incredible growth actually highlights a potential real-world physical constraint on this whole AI dream. The crucial element to watch long-term might not just be whether Vertiv can build the 800 VDC systems on time, But whether local utilities, in places like Ohio and Virginia and Arizona can actually generate enough power and maybe just as importantly, secure enough water to keep these new megawatt scale data centers humming 24/7, that could be the next bottleneck.